Ladies and gentlemen, welcome back. I'm glad that you are here. It is June 6, 2018. This is Christopher Aaron. We are going to be looking at the recovery pattern that is taking shape in the gold market. And what is the shape of that pattern? Wouldn't you know it? Something of an inverse pyramid. We can also call this a triangle. We have been studying these patterns over the last several weeks, as you'll know, and I think you will be quite interested to see how this pattern is shaping up now. So let us take a look. We begin by looking at the gold market over the past 3 days. Nothing much to say yet about gold except the sellers keep showing up when gold makes an attempt to recover that resistance zone, which was formerly acting as support. We saw that over the December through May time frame. Gold was bouncing every time it hit 1300, and now what do we notice? Gold cannot get back above that level. So the futures traders are still existing in this level in the low 1300s. That's what accounts for that weakness there. Very interesting to notice here when we look at silver. For example, do you remember the videos that were made over the last several weeks where we were talking about the gold to silver ratio? Premium subscribers will know exactly what I'm talking about. We've been looking at that extensively over the last several weeks. We've been talking about this pattern, the topping pattern that we've seen in that it was suggesting that silver was about to start showing leadership, which would be a very good thing for the entire complex. And sure enough, here we have this little outperformance day by silver. Nothing much to write home about nominally as far as the price action, only up 20 cents for the day. We've been here before, but it's that outperformance that is very notable, and we should be following this quite closely as the summer goes on. My best estimation is we're going to see some more days like this over the course of the next 1 to 2 months, and then some real leadership start to be shown by silver late summer. Late summer. Of course, I will let you know if anything goes wrong with that thesis, but that is what we're seeing now. Let's take a look at this recovery pattern that is shaping up here in gold. The things that I want to draw your attention to as we look at gold from 2013 through the present. We're looking at this triangle shape, and the ascending triangle forming the second half of this pattern here, the rising part of the triangle. But the entire thing, you can really see, going back even further, forms something of a massive bottoming triangle formation with a relatively flat resistance zone here underneath the $1,400 level. What was a declining trend for sellers and now is a rising trend for new buyers to enter this market. And I want to show you these patterns throughout history. It's quite astounding if you're someone that loves to study markets and really boil it down to what is actually happening and sort of step away from just believing that everything is out of your control to understand. There are ways that we can understand these markets. And the level that we have to follow at this point is the 1240 region right in this zone, which would be where gold would find support if this downtrend that has taken shape over the last several weeks continues. We'd be looking for buyers to step in here on this lower trend line. This is what would show us that the structure of this recovery, the 6-year basing pattern in gold, this is what would show us that the structure of the recovery has been maintained. If we see buyers step in here at any point, as they've done here over the last 2.5 years, at higher and higher and higher levels. This is the definition of a rising trend, and we have to see a rising trend and a basing pattern before we can see a market legitimately begin to take off more aggressively to the upside. Let's look at this pattern throughout history. Now we're going back to a time period when many people don't zoom this in very closely to look at this, but let's look at it with a bit of a fine-tooth comb here. 1974 through 1978. Look at this pattern. A very similar pattern that has taken shape as today. The decline, you can basically add a 0 onto the y-axis, and you have the decline that took shape from the 2011 high. We were at just over 1900 in 2011, just over 190 here in 1974, declining almost the exact same percentage, and then fully recovering. So keep in mind, we are right here, more or less, in this recovery pattern. We are talking about gold that is 30% off of its bottom, more or less, from the 2015 lows. This is where this would be presently. But imagine this, the recovery here being almost a 100% rise from the low. Once again, note the shape of the recovery pattern. This triangle, this inverse pyramid, this inverse triangle. And notice how buyers came in every several months at higher and higher and higher and higher levels. The structure of the recovery through 1978 was maintained. How important is this? That a market take a defined structure and that we see buyers stepping in every several months at higher and higher levels. How important is this? Let us fast forward this chart another 18 months only. Boom, look at that. Now you can barely see because everything is compressed because we're adding so many more percentage points here on the y-axis. You can barely see how steep this recovery was. Keep in mind, this was a 50% loss and a 100% gain, much more than we've seen already in gold. And look, a 300% rise from the previous resistance zone, from the previous peak, in just 18 months further. So there is certainly merit to following whether or not buyers are stepping into the gold market at higher and higher levels over time, and whether or not the structure of these patterns is being maintained. This is in our best interest to follow this. Why? Because let's look at what happens when the structure of a recovery attempt is not maintained. Same potential pattern here. It's the same recovery attempt. We are now talking about the basing pattern that developed from 1983 through 1988. Look at that, the decline and the rise again, taking the shape of the inverse pyramid, the triangle, however you want to call it, with a relatively flat resistance zone, this time just above 500, and a clear descend and then a clear ascending trend. Until when? Until late 1988, when something went wrong with the pattern. Okay, so we see all of a sudden, as opposed to higher and higher and higher lows, we start to see a lower low come in here in late 1988. Now, I'm sure, especially as gold recovered here in the later part of the year and got back into the 450 region, only $50 away from the high here of the last 5 years, I'm sure there are people who were not studying these patterns and who were saying, well, this is no big deal. You know, gold's just consolidating. It's getting ready to overcome 500 and work its way back up to the all-time high, 850. I'm sure there were people who were not looking at this trend line and the pattern shaping up here. And the question is, how significant is it? How significant is it when a pattern fails to maintain some structure in a recovery like this? We can see the break here. This is a very clear linear trend line break. What were the ramifications? There's the same pattern. Failure to maintain the structure resulted in 12 more years of declining prices from the breakdown point. You can see a bit of a retest here, as we said, and then it was basically over for gold into the double bottom 99 and 2001. Furthermore, from this point, from 1988, you did not recover your money until sometime in 2005. So it was almost 17 years before you recovered this level. So as precious metals investors, and look, was there manipulation back here in 1988? Probably. There is today. So why would there not have been manipulation back then? Was there inflation? Of course. Was there the Federal Reserve printing money to pay for wars and to give to membered institutions? Of course. All of these things were happening here. And you can blame it on whatever you want, a rising stock market. You can blame it on manipulation. But the bottom line is it in your favor to ignore what the actual market is doing? Is it in your favor to ignore a breakdown in a significant recovery pattern? We're talking about this triangle here and to ignore that for the next 12 years, I would say it's not in your interest, even if you're only a fundamentalist by heart. I would say it is not in your interest to ignore significant breakdowns in these recovery patterns. We can see the difference between the late 70s here and the late 80s. What happens when a pattern such as this fails? Let us bring it back to the present. I mean, it's uncanny, right? The same pattern again. We've just studied the two examples throughout history. This is the potential pattern. We're calling this the recovery attempt in gold. It must hold above the rising trend line to maintain some structure in this recovery attempt. As I said, right now this will come in at 1240. It's rising every week. My premium subscribers will receive first alerts if we notice anything that is going wrong with this. We look at a lot of leading signals too that can give us hints as to whether or not when this attempt comes in, if it does come in here over the next several weeks, whether or not we expect this to be holding. This is the pattern. This is the pattern that we have to pay attention to, whether or not we believe in manipulation, whether or not we believe in central bank intervention, whether or not we believe that it's all just a paper game or shenanigans or whatever. This is the pattern. Patterns exist all throughout nature and all throughout the markets. And there is a huge difference when the structure of these recovery attempts is maintained. We can see the difference between the late 1970s when that structure was maintained and the late 1980s when it was not. So please watch out for this. Thank you very much for tuning in. There is a premium research service which goes out every week to subscribers. We do longer videos than this once per month, really dialing in everything related to the precious metals, as well as gold and silver, the GDX, and the individual miners that we are buying and selling here. This is released once every week with a longer video at the end of the month. I also work with individuals. If you would like someone to cut it to you straight, who only has subscribers' interest in mind, please know you can reach me. Check the consultations tab on the website. I am here for you, simply presenting the best analysis that I am capable of. Thank you once again for tuning in. I will see you this time next week.